Okay, now this is one of the most exciting videos that I feel like I've made in a long time because it's not something you're going to hear anywhere else. And I think it's the most logical approach to next year. And I mean, this video could precede large gains, meaning that this video could give you a heads up of what's actually going to happen, which could make you a lot of money. Now, if you do not like to make a lot of money, click off this video right now. It's not for you, my friend. If you want average returns, if you want a Joe Schmo life, get off the video. You're gonna waste your time. Now, this video is really going to challenge the approach that a lot of investors have to this market right now. And I understand it's not going to be something that makes sense to some of you guys, but I highly recommend you at least try to understand how next year is going to play out. I will tell you though, right from the start, the wild card to whether this will be correct or not comes down to one factor, a singular factor. From what we can tell right now, obviously there could be black swan events, either be World War III or something dramatic that happens. The one wild card is, do we have a recession or not? If we have a recession, none of this will be accurate. If we don't have a recession, all of this will be accurate. In my opinion, this is not financial advice. Structure your portfolio how you want. Okay, contact a financial advisor. So I want to go ahead and just jump right into it. This is the biggest secret by far for all of 2025. And I wrote this post on X. Okay. It says this is the biggest secret for 2025. Under Trump, we will see inflation come down more than expected via Doge, Department of Government Efficiency, and really just rents coming down. I write next, it has already started. It takes a long time to get rent inflation down, but current market rents show this as proof. Take a look at Redfin's, rent tracker. Get this, in August of 2022, national rent peaked out. Okay, well, for all bedroom sizes, right? For 1, 2, 3 bedrooms, just the average peaked out at $1,700. Today, it's down to $1,619. This is not what you would expect if you looked at the last CPI report and the shelter category. This is because of owners' equivalent rents. Now, I don't know about you guys, but at least where I live in Michigan, I've been looking for a new home, right? Really for transportation reasons. I have to drive far to get to places I want to go to, where I want to put my daughter in school that's heading into school next year is not where I currently live. There's nothing wrong with where I live, but she knows other kids in different school districts, and I want to move there, right? Well, I've been looking for homes, and the homes that I see on the markets are just sitting there. They're really not moving. And when your CPI report is calculated in owner's equivalent rents, and people realize, oh crap, I can't even sell my home because the mortgage costs are so expensive, I probably won't be able to rent my home much easier. Then that's where you start to get the psychology switch that says, okay, maybe rents have fallen. And I think we're pretty much there. Okay, I think 2025 is going to be the year of rent inflation coming down, actually going what could be negative, which is a crazy kind of thought process to have, right? But asking rent month over month was down 0.6%. Median asking rent year over year was up only 0.2%. That's wild. To take a look at the last CPI report that we had year over year. Look at shelter here in dark blue. It's still, by far, the largest category of inflation. Food inflation's pretty minimal. Shelter's the largest. Core services excluding shelter is here in dark purple. I think this will come down a little bit, but probably is going to remain a little on the high side. Energy is negative, and core goods is also negative. So all you really need to see here to get to 2% is shelter that comes down a bit, right? If you get 25% reduction in core services, excluding shelter, and you get a 25% reduction in shelter, you're going to be right at about 2% inflation, which I see as pretty probable. Again, because back to what I said here, inflation really comes down to expectations. And in the Michigan Consumer Sentiment Survey that we got yesterday, 1 year inflation expectations actually fell from 2.7% down to 2.6%. And there's a lot of people that I've talked to over the last 12 months that literally voted for Trump because prices were cheaper in 2016 through 2020. There was this perceived notion that there would be less inflation under Trump. This is something that I noticed that maybe you guys did not notice, but that was like the number one reason people said they were voting for Trump. And I think that psychology will work its way into the actual inflation numbers that we see. Now, if you don't take my word for it, Redfin's CEO, Glenn Kelman, just said on CNBC yesterday, quote, rents are likely to come down in 2025. So I'm not the only one that thinks this. Now, on to the next segment, because obviously inflation coming down is going to be great because, what if we start to undershoot the Fed's target? Crazy thought, I know. But what if we start to undershoot the Fed's target? They're going to be cutting rates more because of lower inflation. Imagine how positive that would be for markets. And at this point, it's all based on expectations. Wall Street thinks we're going to have higher inflation. I don't think that's the case. That is a big potential positive catalyst for 2025. Now, again, moving on. Tariffs. This is another big issue. But let me give you one of the biggest secrets of 2025. I write here, tariffs will only be enacted to the point of which they don't impact the economy. When the SPY starts throwing a fit, that's a no-go for the Trump regime. We know this is true really for a couple different reasons. Number one, we've seen this play out before. From October 3rd, 2018 through Christmas Eve, December 24th, 2018, the S&P fell 20% because of some of Trump's tariff, threats, right? Presumed US-China trade war. Markets fell 20%, and they quickly stopped all of the tariff nonsense. Okay, Trump already knows you can only go so far with tariffs. You can only, have a certain economic impact, or the markets will revolt and you will not be able to do anything, which is essentially what happened in 2018. There was a lot of big threats of tariffs, and then we kind of settled with, tariffs on certain areas of the Chinese economy, in which those tariffs are still in effect today. So it's as simple as that. When the markets start to revolt against the tariff policies that are being thrown out, when the markets start to actually react negatively to tariff policies, they will not be enacted. They will be canceled. And that'll be a buying opportunity, okay? Because Trump doesn't want to come in here and destroy the economy or destroy the stock market. He's really one of the only presidents ever that measures his success by what the stock market is doing. Imagine you're the guy that comes in as markets are at all-time highs and crash the markets. You're not going to be very liked anymore, okay? Even from the perspective of the average 401ks. That's not his goal. And if you think it is his goal, then you are in the wrong market. You should go short everything. And trust me, you will lose all of your money if you do that. I'm not a financial advisor. I'm not a financial planner. Do not do anything that I say, especially not that. But overall, it's just a bad idea. So, to the extent Wall Street is fearful about higher inflation and tariffs, it's without a doubt the wrong view. This is a positive upside surprise coming in 2025, especially for small, mid caps, and cyclicals. See, for a while now, I've tried to imagine where the upside scenario could come from in 2025. And I was struggling with this for a while until Trump won the presidency. Until we started to see over the last couple of weeks the negative verbiage from Wall Street about tariffs and about inflation that could be higher, in which I've known the whole time, but it's coming more obvious that this is a big positive catalyst. When inflation comes down more than expected, when tariffs are not as extreme as Trump is forecasting. Right now, Trump's saying a 60% blanket tariff on China. I'll tell you right now, that's not going to happen because the markets would crash. We would go into a recession. It's not going to happen. So there's a positive surprise on the back end of that when we get smaller tariffs or more selective tariffs. Now, there's also the flip side of that coin. Tariffs could lead to more onshoring, more domestic investment, which could also be good for economic activity. Now, I go on to say here, this is bad news for big tech, as they will no longer be able to be the only party in town and the quote-unquote defensive trade. Big tech has been well liked because of, higher inflation, presumably higher odds of a recession as the Fed was raising rates. If inflation comes down more than expected and tariffs are not as extreme as we're expecting, which is my base case assumption, big tech's no longer going to be the area that you want to be in. It's going to be small caps, mid caps, cyclical companies that could benefit from lower interest rates and higher economic growth, as well as onshoring and more domestic investment. I also say here, small cap and mid cap typically have traded at a premium valuation to large cap tech. That is before 2023. So 2023 kind of changed everything with the whole crowding into big tech. Big tech has traded at higher valuations than small caps and mid caps since at least 2023. Why? It's actually quite logical. Small and mid caps should offer more growth than multi-trillion-dollar businesses. Under this framework, I'm incredibly bullish on these areas. You could actually experience something pretty remarkable next year. Imagine if big tech, trading at 28 times 2025 PE, came down to, let's say, 18 times PE, where the average S&P stock is at, but smalls and mid caps actually got to a 25 times 2026 PE. This would be a stock picker's dream. And essentially what this would do, since big tech holds the large market cap weighting in the S&P and the NASDAQ, you could actually see the S&P and the NASDAQ stay pretty flat, even if big tech falls, and the rest of the markets go up like 35%. Right? You could see a ferocious rally under the surface of this market if big tech were to actually come down, as their growth rates are now slowing down, right? I should have probably added that. You could see these things kind of net, where if you're a stock picker and you're investing in small caps, mid caps, cyclicals, beaten down, unloved companies today, they could be the massive outperformers next year. Whereas big tech, the crowded trade today, may not be. So I think there's a risk to the index at this point. I don't like the S&P or the NASDAQ on an index level. I think risk to reward is poor here. Whereas if you're a stock picker, maybe a stock like Tesla, maybe small caps, mid caps, cyclicals, right? I'm very confident you're going to outperform the index by maybe 2 or 3 to 1 next year. Now, again, the only wild card to this is a recession. If we have a recession, then the opposite of this video is true. Small caps and cyclicals and mid caps are going to underperform relative to big tech. They're all going to fall, but if big tech could fall 25%. Small caps could fall like 50% if we go into a recession, maybe more than that. At this point, it is far too early to tell whether we're going to have a recession or not. I think the odds have gotten lower of a recession in recent months, but it's still a looming possibility that we just don't have clarity on yet. And I do think there will be at least one more growth scare in the relative near-term future. I believe in Q1 or Q2 of 2025, by midpoint of next year, there will be a 10+% correction. Because again, markets are all based on expectations. Expectations are that we're going to have higher inflation, tariffs that are going to be bad for the economy. One, I think those expectations, again, are wrong. You're going to have less extreme tariffs, lower than expected inflation. That's where the whole thesis of small, mid-cap cyclicals will outperform. But as far as the headline economy, expectations are really high. Okay. Now, I think we may actually come in with those expectations, but at some point, that will get shaken. At some point, the data will start to come in bad, and Wall Street will say, oh crap, maybe the economy is not going to be as good as we think. And that will cause markets to sell down. Now, I also think at the same time, literally at the same time, you will also get some of these tariff announcements. Okay, markets are not going to like some of the scary tariff announcements that we hear. Ultimately, they will not be enacted. That's why it'll be a buying opportunity. But once you get those tariffs that come out, perhaps mix that with some weakening economic data, and that's where you're setting up for a 10 to 20-ish% correction. I think it'll be short-term in nature, but that will be a huge buying opportunity. And I'm setting up for that today. How you set up for that is raising cash. It's getting ready to buy the dip. Now, I know what a lot of you guys are thinking when you listen to this video. You're like, I'm all in on Tesla. I'm a good chunk of my portfolio is in Tesla. What does this mean for Tesla? Because Tesla's not a smaller mid-cap company. I actually think Tesla is the exception to the rule. Clearly. Hopefully you guys picked that up by now. Tesla is the exception to the rule. Tesla will outperform small caps, mid caps, certainly large caps, and all of your indexes next year. And there's really a lot of reasons for this, but I mean, Tesla's delivery growth is expected to accelerate 20 to 30%. Now, if I'm correct and inflation comes down more than expected, allowing the Fed to cut rates more than expected, we're only thinking we're going to get 3 rate cuts next year. Let's say 5 or 6 rate cuts actually is our reality. That's going to be really good for Tesla. Presumably 10-year treasury yields come down too as markets realize, oh wait, we're not going to have higher than expected inflation. I mean, that's going to be a really good scenario for Tesla's margin story. So I think the fundamental valuation will start to catch up to what the stock has already done. Okay, because Tesla on face value looks expensive. If you're a value investor or just someone that purely looks at current fundamentals, looks expensive. I think valuations will catch up to that. I think profitability will start to really explode next year. But beyond that, the large upside where I could see Tesla being a $600+ stock by the end of next year really comes down to robotaxis and regulation. Okay. It's already been announced that there's going to be lower regulation on full self-driving, right? On robotaxis. Now, yes, I do believe, at least at first, it'll be something like Waymo, where you have people sitting behind massive screens that monitor the drives that are taking place on robotaxis, right? That's probably going to be a condition to robotaxis. I'm just fine with that. Not a problem, because robotaxis are going to be such high margin, you can afford to do that. Okay. But think about last earnings. What was it? October 21st, I believe. There was no outcome to the election at that time. So Elon and Tesla had to give guidance as if whoever wins, this is what we expect for next year. And that was California and Texas would start robotaxi operations by the end of next year, right? Well, Brad Gersner just came out 2 days ago and said he expects robotaxis could launch in Q2 following some of these, less stringent regulations. I'll take it a step further. We'll stick with Q2. But instead of 2 states, you could see 4, 6, 8 states that actually get robotaxis. Okay, and this is where Tesla's approach of creating this end-to-end neural network for full self-driving and ultimately robotaxi is really going to show its benefits versus Waymo that does not use this, that has to actually map out where they drive, because Tesla will be able to launch in multiple states, whereas Waymo will not be. Now, I think the market's plenty big enough for Waymo and Tesla to succeed, but this is really where I think Tesla is going to shine as where a lot of Wall Street is going to say, Waymo's the winner. Tesla's a concept. We've heard this before. Whereas 6 or 12 months from now, Wall Street's going to say, oh shit, Tesla's the winner here. And Waymo's the less winner, right? The loser, if you will. That's where you get the explosive upside in Tesla stock, because this market opportunity is so large. On, yes, a headline revenue basis, but on a profitability basis. Like, this is massive. If Tesla can bring in 50, 60, 70% net margins to the bottom line, robotaxis will soon be a much, much larger portion of Tesla's bottom line profits than energy, than services, than delivering vehicles, right? And this is really Tesla's growth phase number 2. First of which was vehicles. Second of which will be robotaxis and FSD. Third of which will be Optimus. You are in the second phase, or starting the second phase. And I don't think Tesla stock is pricing that in, right? We're pricing in 2 states next year, robotaxis in limited operation. Let's talk about 4 or 6 states with widespread usage of robotaxis by the start of 2026. Of course, it's going to take some time to actually get things going or whatnot, to produce some cyber cabs, to get people to sign up to Tesla's ride mobility app. Like, these things are going to take some time. But I believe we're in for a big upside surprise there. Mix that again with the backdrop of lower inflation, more rate cuts, and, again, less regulation and less extreme tariffs. And I see a very, very bullish cocktail for Tesla stock specifically next year. And I think a double up from here is not that far-fetched at all. Because again, the profitability that robotaxi will see is going to be massive. And Wall Street has to price that in, especially as robotaxi really starts to operate. So for these reasons, I'm exceptionally bullish on Tesla. I think anywhere from $600 to $800 next year would not be surprising. I wouldn't be surprised if Tesla's $1,000 stock by the end of next year. Depending on, again, if I'm correct. If I'm correct in everything I just said, Tesla could be $1,000 stock. I'm assuming that maybe it's not going to be as good as I'm expecting, but we're going to be on the right direction. Like, if I'm correct and we get like 6 rate cuts next year, 10-year treasury yields fall to like 3%, that would be a 1.4% reduction from here. Tesla's profitability explodes because of less interest rate buy down, Tesla deliveries pick up, higher margins, right, from the Cybertruck. If all of these things happen, like, I wouldn't be shocked if Tesla is $1,000 stock by the end of next year, early 2026. Now, I really like Tesla because no matter what your age is, Tesla allows you to play the long-term potential of all of these business models that they are pursuing with minimal risk. And I say this like loosely because risk is risk until it's defined. Okay, you could have a company like any of the great high flyers in the past that look like they're low risk, and ultimately they're not because X, Y, and Z happens. But Tesla can offer you what could be 300% returns, a triple from here over the next 1.5 to 3 years. With, I mean, how much downside are we really going to get? It would take a recession to get like 50% downside from here, in my personal opinion. You don't see a large stable company like Tesla that has the prospects of tripling in the next 1.5 to 3 years. No, let me tell you right now, no other big tech name that offers you the similar level of relative safety is gonna allow you to triple up your money. Nvidia's not gonna triple in 3 years. Microsoft's not gonna triple in 3 years. Apple's not gonna triple in 3 years. Amazon or Google, none of those names are gonna triple in 3 years. To get a triple, generally speaking, in other areas of our markets, you have to take on more business risk. Tesla's deliveries are not going to collapse, again, outside of a recession. Tesla's energy business or service business is not going to collapse outside of a recession. Tesla's robotaxi business, at this point, as it gets up and running, is not going to fail. Okay, it would take a lot for, I think, that to fail. Optimus, long term, that's not going to fail. Okay, these are long-term things, right? So, yeah, I think personally, Tesla makes a lot of sense for next year. And hopefully, it makes sense even more after we kind of break down these individual things that Tesla has going for them. So let me know what you guys think about the biggest secret of 2025 down below in the comment section. I really think this is kind of a quote-unquote secret because nobody's saying what I'm saying. And I actually think it's the most probable outcome. Like, if we were to put this in a probability category, I would say there's a 70% chance I'm correct. Less extreme tariffs, less inflation, more cuts from the Fed because of less inflation. I would say there's probably a 15% chance at this point of a recession. That's an actual recession. There's going to be a slowdown in growth. There's going to be all that. But an actual recession, probably like a 15% chance. I would say there's also a 15% chance that inflation goes up from here, is sticky. We get maybe no cuts from the Fed, or just very minor cuts from the Fed next year, and extreme tariffs. Well, I don't think extreme tariffs are going to happen either way, because that's not what Trump wants to do. It is destroy the economy on purpose. So yeah, there's like a 70% chance I think I'll be correct. But there is a chance of a recession, and there's a chance that inflation is going to be stickier, that inflation does not give a shit about what's going on in the rent market, what's going on with the economy, any of that. So let me know what you think about this down below in the comment section. I could probably go on for a lot longer here, but we'll cut it here. I think we've established the basis of this theory, and we'll build on this more over time. So if you have not already subscribed to the channel, hit that like button as well, because it's free 99. If you guys want to support the channel, check out the link down below in the description of this video to come join the trading community and come trade with us, come talk to me. I'll pick my brain, I'll pick your brain, good stuff happens over there. Nonetheless, you guys enjoy your weekend, and I will see you in the next one.